Hello, I'm Kate Stichin. You are watching InstaForex News. The falling of the Australian dollar has not ended yet, because this risky currency is still subjected to sales against the background of fears concerning the negative consequences of debt crisis in Europe and talks that the economic recovery in Asia decelerates. The tendency to the reduction of the long positions on the Australian dollar, which became the most popular currency at the market after the revival of the world's economy, started to strengthen, destroyed hopes that almost permanent growth of the Australian against US dollars pair from the lowest rate of 0.60 achieved in October 2008 finally will lead to parity. After the high of 0.93 was reached at the beginning of May, the pair dropped to the level of 0.80 last week, having set new lower range of 0.77-0.85 for the short-term perspective. The vulnerability of the Australian currency was shown on Monday, when Tom Albanese, the chief executive officer of mining company Rio Tinto, said that scheduled profit tax by the Australian government in the mining sector became the major problem connected with the sovereign risk which the mining companies faces with, and this will damage the investments in sector. Amid this news, the Australian dollar almost dropped by 1 cent. According to analysts, it is very hard to determine more long-term consequences for the Australian currency from the part of the proposed tax. But this adds one more risk, whereas there are a lot of other threats for investors' propensity to risk. In Germany, the prohibition for short sales of unsecured credit derivatives and other assets caused fears that the measures of the political response on the Greek crisis in Europe will be insufficient coordinated. The efforts of China directed to the moderation of the speculations in retail sector also caused the fears concerning the perspectives of the Chinese economy, which is the main source of demand for the Australian resources. Besides, the deceleration of the growth in China will negatively affect the export of the Australian resources amid the falling of prices for iron ore by 20% at the spot market since the middle of April. The sharp reversal of the expectations concerning the perspectives of the monetary policy of the Reserve Bank of Australia is also taken into account in the quotations of the Australian dollar. Now dealers take into account 15% chance of interest rates reduction in June against the expectations of further advance of the interest rates by the end of the year. This will negatively influence the currency, which a lot of investors buy in view of relatively high profitability. It was Forex News provided to you by InstaForex News team. Goodbye.